Legal disclaimer: do not make this trade. Seriously, don't. This video is for educational purposes only and placed by a professional trader from Maverick Trading. Maverick Trading is sponsoring this trading experiment with a $100,000 trading account. To trade for Maverick Trading, you can submit an application for stock, option trader or currency trader from the link in the video description below.
Happy Friday, everyone. This is Rob, and it is the last trading day before Christmas. So let's talk about trade number 46. What are we going to do, and why are we doing it? Basically, we at the Flat Earth Trading Society love conspiracy theories, and we're saying the biggest conspiracy theory in trading is that all the books, all the magazines, everything always talk about the entry, and they leave out the exit. We're saying the exit is way more important, so we're choosing random stocks, random currencies with random methods, and we're just simply doing position management and showing you that the exit can give you an edge all by itself. It is the day before Christmas, so we're going to do a Christmas theme. We're going to go to the North Pole. Now, I originally was thinking, okay, let's do something like what company is closest to the North Pole? So I got on Google and I was like, okay, trying to find companies near the headquartered near the North Pole. And I really couldn't find anything. There wasn't really any good data out there. So then I thought, okay, why don't I get into a map and check out, what is close to the North Pole? And I was like, okay, well, Canada is going to be the closest. Then I'm thinking, okay, the biggest major town in northern Canada is probably Edmonton. But then I thought, okay, why don't I just go type in North Pole? And I actually was quite surprised to find out that there is a town in Alaska called North Pole. So this is North Pole. And you can see that North Pole, Alaska has a Taco Bell, a Safeway. I didn't know that North Pole would have a Taco Bell. So what I decided to do is I said, okay, let's look for jobs in North Pole. And I came to just some employment sites. So I said, okay, let's go to Indeed. Let's see what jobs are there. And here you can see that we have Quest Counseling and Wellness, probably not a public company. Yukon Eye Care Professionals, not a public company. But here we have Wells Fargo. Okay, there's one. So let's do trade number 46 with jobs in North Pole, Alaska. And the first one we came across that is a publicly traded company is Wells Fargo. So let's go check the chart. The ticker symbol for Wells Fargo is WFC. So WFC, and look, the whole market has been in a large uptrend lately. So here we have Wells Fargo. It hit this high of $50.50 and really has just traded sideways, down a little bit since then. The 13-period EMA is definitely moving higher. So this is going to be a long on Wells Fargo. And our current ATR, well, our current price is $49.55. And our current ATR is 95 cents. So those are our trade numbers. North Pole, Alaska. The jobs available for a teller in Wells Fargo. Let's make the trade. It is Friday, December 22nd, 2023, the last trading day before Christmas on Monday. Trade 46 is Wells Fargo long, $49.55. ATR is 95 cents, so 2x ATR is $1.90. So that initial stop's going to be $47.65. Let's go do our position sizing, and then we'll go make the trade. First thing to do is going to be to check our position size. Right now we have 3 trades on. All 3 are losers at the moment. We've got Lockheed Martin, we got Booz Allen Hamilton, and we've got our pound dollar trade. If we check in and see what is our account balance currently, it's $104,863. So that's going to go into our position sizing calculator. Count was 104,863. Our risk is a steady 1%. Our entry price was $49.55. Our stop loss was going to be 2x ATR of $47.65. Let's just go ahead and make these 0 and hit calculate. And there we have it. 551 shares is going to be the trade. Let's go make it. Let's put in Wells Fargo. And again, this is going to be a long. Our position size was 551. Nope, not 100,000, 551, 551. I'm going to throw a limit price just up above the market a little bit to make sure that we have time to build our attached stop order. So I'm going to attach our stop loss. It is going to be a trailing stop. And remember, our trailing stop was 2x ATR, which was $1.90. Make sure that is good till canceled. Hit submit. And there the trade has been made. So let's check in on the price that we actually got filled at, 49.515. So let's round that up to 49.52 is the entry price. Let's update everything and finish up trade 46. Long 551 shares of Wells Fargo from North Pole, Alaska. And here are all of our numbers. So we have all these numbers set. We've got our initial stop. We've got our 2x target, our 4x target. We know what to do. We're not going to do anything until either we get stopped out or a 2x ATR profit is reached. At that point, we're going to tighten up the stop a little bit. At 4 ATR, we're going to tighten it up again. And then that's it. We're never going to do anything after that. Consistency is the key to trading. Being consistent. We have no idea which one of these trades are going to be good or bad. Now, it's very easy with this experiment because we're using stupid methods. Like we're going to North Pole, Alaska and choosing a job that's available for somebody in North Pole, Alaska. That's like the dumbest way to pick a trade. Here's the fallacy. When you go and you jump into your charts and your technical analysis and fundamental analysis, you start to convince yourself that you think that this is a really good one. And so what happens is you have a harder time being consistent on your position management because you have all these emotions invested. You have time and effort invested in it. And it makes it more difficult to just be robotic in your position management. With this experiment, we didn't do any research at all. We just picked stuff at random. So it's much, much easier in this environment to be very consistent. If you can trade in your own personal account like this and put in effort on picking good positions rather than random positions, you should do really well. But it's that consistency. Remember, no matter how much work you did to pick your trade, you did Fibonacci retracements, you did Gann lines, you did Elliott wave, I don't care what you did. Some of those are going to be the worst trades in the world. You have no idea when you click the button which is going to be a good one and which is going to be a bad one. Even though you've convinced yourself, oh, this is a good one. It's breaking out of a high base and it's blah, blah, blah. Guess what? Some of those are the worst trades ever. Be consistent in your position management. Follow your rules, follow your system. That is how you become a professional trader. It's not knowing the latest, greatest technical analysis. It's can you follow your system all the time without deviation. Everyone have a Merry, Merry Christmas, Happy New Year, Happy Holidays to everybody, and we will keep on trading. We're just going to keep on. Again, December, January, February, who cares? It's all just months of the year. Everyone, happy holidays. Goodbye.